All right. So number one, tell
Yep.
us who you are and how long you've been.
See, that's why I don't film with kids and animals, right? They say.
Hi everyone, welcome back to my channel. Suyin here, and I am bringing you a new video about investing, but this time I have a special guest and we're gonna find out who he is and what he does, how he invests, and take away all the lessons that he has to offer us. I really enjoyed having that conversation and I hope you do too, so check it out.
Yeah.
All right, let's jump straight into it.
Cool.
We're doing this video today called Investing in Troubling Times.
Yeah.
And I have some questions for you.
Of course.
Nothing stressful. So just answer as you go.
Yeah.
Who are you and how long have you been investing?
My name is Ken. I'm the country manager of StashAway. I have about 10 years of investments experience. Um, I started investing indirectly since I was actually quite young. My mom took my ang pao money, and she's a unit trust agent, so I guess I've been paying her the sales charge. She put that in unit trust, and I actually used a lot of that to fund my own wedding, so that's good that I saved. And in uni, I started trading some stocks in Australia. Learned a bit about that. Oh, I forgot about investing as well. Like I have a house, so this
Oh,
is this
yes.
is the house. Yes. Now I mostly invest in StashAway.
All right. Wow. Okay. I didn't know you've been like 10 years in. You're like a quite senior in this now.
Yeah, I am, but mostly passive platforms. Like I do a very little DIY, just because that's the kind of investor I am. I've found out that like I'm more focused on my career, so I don't have the passion and time to really like read financial statements and reports and follow all the news about specific companies. But it's obviously super important to invest.
Nice, nice. So you've touched a bit on what I was going to ask you next, but
Yep.
maybe it's good to just clarify again. Describe your investment strategy and
Mm.
also how has it changed in this period of
Ah,
end of bull?
right. So my style is best described as very diversified. I use dollar cost averaging to spend time in the market as opposed to time the market, and I try my best to be debt free, right? Because I want to get rid of this mortgage.
Does it weigh down having a mortgage?
I think it signifies being a grown up person in terms of how you pass into adulthood from a financial perspective, right? I think in terms of life phases, when you get a mortgage, it's like that's officially when you're grown up.
Oh,
Overall, as long as you're not drowning with like 5 properties,
yeah.
I think it's generally a good thing because for me, I buy to stay and I got married and I stayed here. And I think it gives you a sense of responsibility so you don't just go crazy in Zoop, like usually you're like, okay, I need to spend this much on my mortgage, so only I will go halves with you on that champagne. The other half you get, okay? Plus you owe me money.
I cannot remember the last time I was in Zoom lah. How has this strategy changed in this period of time?
Okay. So my dollar cost averaging has continued. And in terms of how I'm dealing with this market volatility, every time the market drops more than 3 to 5%, like that day when it dropped 12%, like a couple of days ago when it dropped 4%, I'll put in one extra thousand. So like my $1,000 are my bullets. So spend a bullet every time it makes a big drop. So obviously there are days that I do run out of money. So then I just wait for my paycheck to come in and then I start again. So just averaging in the lows, but definitely not picking the bottom and like silang all in. Definitely not.
Wow. I think that is like next level mastery skill lah. If you can like really pick the bottom and slide.
No, that's just pure luck, man. Like if you have that luck, I want to go gunting with you. But otherwise, investing wise, I think you can get it right this time. But
Yeah,
like, you can't get it right all the time.
right. To me, there's really no such thing lah. Who
Yeah,
really knows until after the fact?
yeah, for sure.
Next question. What
Mhm.
have you been filling your non-working hours with this MCO? And
Mm.
have you succumbed to the dalgona coffee? I realize you're drinking coffee.
With work and life, it starts blending into each other, right? So I think ultimately there's little tasks that I do throughout the day. So I don't really have like tons of free time, but the times I am free, I'm I don't know. I think I'm reverting to comfort, and then like I'm reliving my childhood by playing old video games.
Oh, that,
Dalgona coffee, I haven't, but because I don't have instant coffee, but I have seen a recipe, so I know how to make it, and I make my own coffee. So yeah, I just use my travel every day. So yeah, sponsorship sponsorship right here.
please sponsor Ken Breville.
Yeah, this spot is still untaken. White goods. This is your target market.
Okay, nice that you're not burdening your wife to make your coffee.
No, I make her coffee, but we all do our part, right? Uh,
Maybe I'm the one that sounds like the Doraemon.
but like I do a bit of cooking, she does a bit of cleaning, we both take turns ordering food, but we're not super domesticated. It's just we just wanna we're both busy and we both work hard, so we just wanna share the chores.
It sounds really nice. Oh, a good split.
Mm.
Okay, let's move on. This one, you need to answer very quick, okay?
Okay.
3 biggest problems that you have when it comes to investing.
Um, my own emotions, um, having to constantly relearn about the market,
Mm-hmm.
and definitely not having enough money to invest.
Oh my god, yes, we have the same problem.
Really? Oh, no, I mean like money makes money, right? You can't expect you to like put in 10,000 and make 1 million in like 10 years, right? You need like capital makes capital, man. Like you
That not enough money problem, I think, is universal. But
need
I really like how you how you mentioned emotions first, because
yeah,
this
yeah,
is the part that trips us all up when it comes
yeah,
to investing.
yeah.
So maybe let's focus on that. How do
Mm,
you overcome this emotional issue when it comes to investing?
yeah. So firstly is to recognize the emotion. So when you invest for the first time, you'll feel these things. So just note them down. Recognize that they are your own and they inhibit you from doing well. And they're actually very basic emotions. Usually they are fear or greed, so nothing beyond complex like mommy issues, daddy issues. You have to go and see Freud or whatever. Like it's very very basic stuff. So I usually follow methods and frameworks like dollar cost averaging, right? Staying invested for the long term, reminding myself about my investing goals, and yeah, just trying to basically negate those emotions by following a method and to be disciplined.
Perfect. Let's get some advice from you. You are pretty senior in this. Like, I'm only like 3 years in investing, so 10 years into investments. What's the best investment advice you've ever been given?
The thing is, like wherever you are, depending on your style, you'll get advice that works for you. So the advice that works for me at this point comes from my CIO, Freddie Lim. So he's been in the markets for 20 years. So he's telling all our investors to not get KO'd by the market, right? So you have one punch from the coronavirus, another punch from the oil shock,
Yeah.
and then markets are down like 30%. How do you not get knocked out, right? So you got to stay on your feet. And how do you do that investing wise? Is you have some dry powder, you stay liquid, and then stay in the market, stay invested.
Yeah, I think that's pretty solid. For my channel in particular, there are a lot of new investors,
Mm.
which I'm pretty excited about to get people started in this. Do you have any advice for them?
As new investors now in 2020, it's a really good time to learn because you shouldn't let this crisis go to waste. Crises come once every 10 years or so, and you will learn at an accelerated rate about yourself, about markets, and how the financial markets actually work. So it's a good time to learn. So invest a little bit. And what I would say specifically about investing for beginners is to first have a 6 to 12 months cash buffer, meaning you are not desperate when it comes to investing. Never be greedy, so don't use leverage. Don't look at things like um, trading on your credit card in FX, using leverage or share margin. So I would say no leverage. And then it's better to get it right from day one than to correct your methods or course correct after you started investing already. So how you get it right, have your cash buffer, use no leverage, and then go into something that you can invest in the long term rather than switch platforms, switch instruments every time you see a crisis.
Oh, that is very good. So we talk about StashAway a lot on my channel, right?
Mm.
But people always ask about the rest. And when you pile on too many different platforms, what's your take?
Yeah, firstly, you always have to remember your passwords because you forget where your money is. It's like, what password did I use? Forget password, right? So having like more than five is really like not really ideal. You gotta like Marie Kondo your own investments, right? You know, you look at it, that trading account that you signed up because of like impulse buying, then you got 1,000 bucks there, 1,000 bucks somewhere else. So consolidate, Marie Kondo a bit. And I would say pick the best in class, right? There is no one silver bullet, right? So let's say for booster accounts, pick the best. For peer-to-peer, pick the best. For robo advisors, pick the best. For unit trust, pick the best. And then just have like 3 to 5 platforms and just use that.
Fantastic. Okay, great. Now, this one is something I've been very curious about, so I'm gonna ask you today. You
Yep.
know, like take opportunity, 趁机会, right? So, what is your what is your StashAway portfolio looking like right now?
Okay. So just to give you all context, I've been dollar cost averaging since November 2018. So
Nice.
every month I've put in a similar amount. I haven't varied it at all. So if I were to just dollar cost average, I would actually lose all my little bit of 2018 and all my 2019 gains in these
Mm-hmm.
past 4 weeks. So at one point I was up maybe like 15% simple return. So basically, I lost all of that in the 3 weeks because it happened so fast. Even before you can dollar cost average in again, you already lose like so much, right? To give you all full context, I'm also in a balanced portfolio. So I'm not in a portfolio that's super risky as well. I'm in one which is 20% risk index, which is equivalent to around 60-40 equities bonds. So obviously equities get hit really hard and I lost those gains and entered losses in these 3 weeks. So because of that, I saw it as an opportunity to average in and drip into these markets. And because I've been dripping every time the markets go down more than 3 to 5%, basically now I am either slightly break even, a little bit positive, especially after the relief rally last week, where markets went up the most in like since the 1930s, which is ridiculous. And then basically in the last few days, it's down a little bit again. So I'm down less than 5%, but that's only because I dollar cost average and I drip in a little bit every time markets fall a lot.
Very nice. Yeah, I think that is something that we should take note on when we are listening to your response. There's no like emotional like, oh, I'm making a loss, like nothing like that. So
Jalan.
it's very nice to, have someone on the same like wavelength. Cause
Yeah. Because
yeah.
my goal is for retirement, right? So it's a very long way away. And I think it's also good because we are very early into our investing journey. And let's say you're in your investing journey and you make losses, big losses like this period in the first couple of years. That's actually okay because you have 10 more years to go, 15 years more to go. But then, I think actually it's all a matter of timing. That's why you need to start as early as possible. So let's say you are retiring and you have your personal investing account. Let's say you've made a lot of gains over the last 10 years. At least now, this you retire this year, you can actually maybe withdraw and actually use it for your own retirement. Because if you're retiring this year, you will see that drop by quite a lot, let's say like 20%, and that will screw with your retirement plans. So if you're retiring this year, it's actually like very bad timing, which
Yeah.
is why you don't know when the market will crash, but you know when your investment goals will fall due. So start planning early, and the earlier you start, the better.
Mhm. Thanks for that. And with that, you've answered what will you tell investors in losses today?
Yeah. So on top of that, who investors who maybe are experiencing losses today on any of their investments, whether it's single shares in the local market, whether it's StashAway, whether it's your unit trust or whatever, I would
Mm-hmm.
say the two things you need to ask yourself is firstly, are you liquid, right? Do you have spare cash? And then secondly is do you have time?
Yeah.
So the first one, are you liquid, is important because you need to continue investing in this period of time. And even if you're not investing, if you don't have money, for example, or you've used that money for difficult periods, maybe you have to stop working in this period of time, then at least you have time on your hand to ride out the stock market volatility so your portfolio can recover.
Right.
So money and time, two things that investors always should have.
For sure. And I think like something I really want to highlight from what you said is the losses actually are paper losses. It's not an actual loss until you sell
Yeah.
while it's in a loss. So that's something to really keep in mind and
Yeah.
stay invested.
Yeah, realized and unrealized plays a big part, especially psychologically. Even when you are in the positive and you are investing more because you're up 15% and you feel super confident because you're playing with house money, so to speak, it's also unrealized gains. And when you're in the red and you say you find it hard to dollar cost average or you find it hard to top up your investments, it is also unrealized. So you got to recognize your time period so you know that you have enough time to ride out this storm and come out on top.
Okay, I have one last question for you. What's one thing you are looking forward to today?
The coffee, finishing this coffee. Other than that, I am getting a delivery of groceries. So as a middle-aged guy, getting groceries without having to go out is very exciting. Greens!
I think you're set for life, lah. If this is what you look forward to, that is how you know you are grateful with what you have.
The small things, the small things, the small things. Thanks, guys. So for all of you, just stay safe, just stay home, and in a couple of weeks' time, we'll see you all in real life.
Real life stuff.
All right. So thank you everybody for watching. I hope that was valuable to you. If you heard some sounds during the video, that was Taylor. And let me show you, because she is here right now. Yeah, that's you. And she has been a very, very good roommate, except that I've never had to clean up the pee and poop of roommates or housemates before. Awkward. Okay, yeah, so I hope you enjoyed that. I will see you in the next one. Bye.